already.
Oh, okay.
Only Sean ask question. Okay.
Good lah.
Is it? I think we should be live. I see the live already.
Yeah.
Okay, so hi, welcome to our live session. I think this is our second time going live. So because of schedule consideration, that's why we always go live at like ungodly hours. But hope you guys always enjoy our opinions and our discussions and stuff. So I think primarily for this live stream, right, we just kind of wanted to connect with the broader audience, and like because it's always a one-way street, right? So only through live sessions then you can kind of have a two-way conversation. But I think one broader question before we take up any questions, feel free to engage us in the live chat. We will pick it up later. But I think in the first part of this entire discussion, because the market seems to be in a new bull market, because from the bottom it's up like 20%. Even though it opened red now, I think considerably it has ran up by quite a fair bit, especially your tech companies. So I think just wanted to go around and kind of get your opinions and just kind of a temperature check to see what you guys think, whether we are in a, I don't know, a new bubble, whether there's more leaks to run, or whether you guys are bearish of the entire market or not. So maybe you just get Kelvin to kickstart the discussion. Kelvin, what do you think?
For me, I'm bearish overall lah, but not bearish until market crash that kind lah. I think that phase is more or less over already. It's like the worst news. Okay, there are only a few bad news previously, so it's like the Fed raising the rates. Okay, that one has almost hit the ceiling, almost lah, maybe lah. Then the debt ceiling thing, a deal is very likely lah. I think no one wants to sabotage themselves lah. Imagine that you are the one who caused US to default lah. It won't look good on your resume lah. So the next thing is company bad earnings. All that, I feel like it has been priced in through all the crashes over the past few months or even past 1 year lah. So it's like, what's next? The war is already ongoing. Like, can it escalate further? I don't know. I hope not. So yeah, so that's why I'm bearish, but I don't think the economy will go back up anytime soon. That's why I feel like the market is not going up anytime soon. I hope not lah. I haven't bought enough yet lah. Yeah, but what about Bunti?
Wait, I think something else that is not going up is the like button count. And there's like 40 of you watching now. There's only like 8 likes that I can see here. So please help gently tap the cute little like button. But yeah, Bunti.
Yeah, I think I share similar views. Now we all share similar views since Chicken say he's the biggest bear among all of us, right? Now we all join team with him already. Yeah, just sharing my thoughts on the overall market right now. I think I'm also on the bearish side, given that you are looking at the price, right? The stock market all goes up, especially tech. Even my portfolio also keep going up. I also don't know happy or not happy, situation like this. So, but we haven't seen all the good results, right? Say for example, if we have seen that now really inflations have come down more than most people expect, right? Then it justify a much like bull markets. But we haven't seen that. If you look at corporate earnings, also is like not as bad as many people thought, but also you want to say good, also it's not that good, right? So it's like, okay, fundamentals is like this. You look at the macro is like this, but the stock market is like everyone going to moon, right? So I think this is time when I think we should tell people to like stay cautious a bit. Don't FOMO too much. If you don't have a plan, DCA, I think that should be the way lah. But don't go and FOMO in and thought that market can only go up now. That's my feel right now.
What if NVIDIA record earnings tonight?
Then don't know. I still think a bit pricey lah. Still a bit pricey. Actually, these companies we discuss quite a fair bit because definitely there are people who are very bullish on this stock, including myself. And there's also people who are very cautious because of the valuation. I do agree that valuation wise is too expensive now, especially now. Yeah, so
but expensive can be more expensive. So there is.
Yeah, but it's really expensive. Like close to 30 times price over sales. That's
first
crazy.
time.
crazy type of
30 times first
valuation.
time?
Actually, not first
What is
time
30
because
times,
Yeah.
man?
huh?
Yeah.
Yeah,
If
what is
they can
30
grow
times? We have
easily
seen
30, 50%, I think very easy come down on the price to sales.
But the problem for NVIDIA is that it's not like their sales is growing at, like 50% over year for many quarters, right? You look at their most recent quarterly earnings, their revenue actually dropped by 21%. So that's not the type of company that you want to pay, 30x revenue. So I would say valuation wise, you need to pay attention to that. Cannot just say, okay, company good, then you buy at any price, right? So I I, I look at the price level, I think should be cautious.
What about Eric? Last one.
For me, I'm still bullish. Like I said last December, I think the chart wise, I think it's playing out very nicely. If you look at the weekly chart, daily chart, it's trending up very nicely in a wave fashion. So of course there'll be some pullbacks here and there, but generally speaking, if you look at the general trend, right, even the 50, 100, 200-day moving average, the golden cross has happened for S&P, I think a couple of weeks ago. So it's playing out very nicely. But obviously, if you ask around like, hey, is the economy still bad and all that, it feels like it, but everyone is like very hot leh. Buying the HDB like bidding up more and more, the condo like selling for 2,000 PSF, like nothing like that. So I don't know. I think everyone is very hot. Everyone is just complaining, but everyone is very, very have a lot of cash on hand. I don't know. Like this is the general feel I get.
like you, right?
Huh? No lah.
But I'm actually curious what you guys do with your, like savings or your cash now. Because I'll start first now. I'll share that for my own portfolio, right? I think last year I've been DCA like every month, quite like almost all my saving I just throw into the stock market. Basically that's what I did over the past 2 years. Since beginning of this year, right? I saw that, like for example, QQQ went up by so many percents, went up so much, right? So actually, I haven't been buying that much this year. And if you compare the period, right, it's like this year, I think for especially for those short-term interest rate, say for example, like the 6-month T-bill, right, also went up. I was okay. I can't quote the exact numbers, but it's relatively high, right? So actually, if we just put our money into T-bills or put into like high saving account, you earn like what 3.5%, 4%, this kind of yield level, right? I think it's quite attractive, right? So essentially, we are paid while waiting. So I mean, let's say if you are someone who already have 80% of your money save up in the bank account and you just want to deploy, right? Then your problem is very different compared to mine. Mine is like I started out with very low, almost zero cash level, right? So when now market chung so much, right, I actually start to save up a bit of cash now, and I'm paid to wait for it to come down a bit now. So that's what I'm doing right now. What about you guys?
Wait, I want to ask, but what if it doesn't come down like Eric mentioned, right? There's the golden cross thing. So I'm looking at the S&P 500 chart now. According to astrology lah, there will be a breakout soon. Because we are in the like ascending triangle lah.
Yeah.
Astrology lah, not confirmed lah.
You want to
So
share a screen?
No, I don't want. you just see it's basically
Share.
bouncing up and down. Share.
Cannot
Okay,
visualize.
let me
I cannot visualize.
Share the screen. Come on.
how to share?
Okay, everybody,
Share the
if you want
screen.
Kelvin to share screen, click the like button.
Yes.
Yeah, that's why.
And comment at the sections.
Yeah, for
the
those of
com-
you who just came in, we are taking questions after this round robin session. So there are 70 over. Y'all can just chat in the chat box. We will filter and we'll kind of just provide our opinion. After Kelvin figures. Okay, he figured it out.
so this okay lah. Obviously, I'm not drawing this accurately enough lah. But it looks like we are in this ascending triangle thing. So when it hits, so that's why there's a bounce recently, because it hit the upper side. So it might bounce off somewhere at the bottom. I don't know where. I'm not as good as Adam Khoo, obviously. So once you reach the end, there should be an up breakout if Eric's theory is correct, or breakdown if it's the bearish view lah. So I don't know, but if Bunti is not buying right now, won't you be missing out on this whole breakout thing?
I'm still buying. It's just that the magnitude much smaller than last year. So like I don't have much cash, right? So it's okay to save out a bit. Let's say if it run up, then so be it. But my portfolios, I'm not selling, I'm not taking profits, right? Because this is not really like trading. This is like long-term investment, right? Yeah. But when it comes to cash, sometimes when the market is so green, save a bit of cash also not a big problem, right? And we are paid. That's the thing that I want to bring out. It's very different compared to, let's say, 2020. If you look at the market, Cheong, you put your money in cash, you yield like what 1% or even less, right? Now we are paid like what, at least 3.5%, right? So why not, right? So that's the point I'm trying to bring up. It's very different compared to 3 years back.
Kelvin, what are you doing with? Are you
For
saving up
me,
more?
actually, it's very similar to Bunti's strategy right now. I haven't been buying as much as last year. Why? I also don't know why. Probably I'm too busy. I'm just accumulating cash while putting it in the bank, earning that 3-4%. But I'm not like I know there are like there's the Chris Honey money, right? He's like trying to maximize all his that 1%, 2%, right? He's trying to find the best bank, best treasury, T-bill, all this, right? For me, I just like, oh, okay, this bank is open. I just put it there because that extra 0 point something percent to me is not that a lot. I rather spend my time making more videos and try not to die in the process lah. So, so for me, I'm just like a bit like Bunti lah, waiting for a bigger drop if it ever comes. If it doesn't come, then oh well, I will miss a bit lah. But long term wise, my goal of retiring by 40 years old, it's still intact lah. That's my goal. Try not to lose money for now lah.
What
How
about
many
Eric?
years more?
About 4 years. Yeah.
4 years more. Okay.
Yeah.
4 years to fire.
Yes.
Eric, are you still deploying?
No, I think I'm the only one that's bullish since last December, right?
And you never deploy.
But
What?
yeah, but because I'm saving for the property so I think you all know, right? Just saving for it. But the more I save, right, it seems like the prices keep going higher and higher.
You will never come back down.
Yeah, it's very puzzling to me. Like the interest is so high, and then the prices keep going higher, and then the new launches are getting more and more pricey. So I'm like question mark there. Like why these people are all so what? Seriously, can somebody tell me why? Why Singaporeans are so what?
No answer. Can only say that property asset class is really going to the moon.
No lah, there's this momentum since the COVID period, like 2020 is a combination of like not enough raw material, not enough manpower, all the PTO, there's not enough MOP going on, there's not enough condo being built. So it's just dragged on from 2020 all the way until now. It's just now it's slowing down, but there's nothing that's triggering a crash. Yeah, so the longer you wait, the higher it's going to be lah.
Kelvin, somebody asked, are you still currently willing, considering that?
I've stopped building a long time ago, like last year. So I'm not building, yeah. Because building is it's very tiring. Like okay, earning money is not tiring lah. It's the mental part. It's like you see the thing, the stock price suddenly zoom out, right? Then you see, oh shit. Then you see this, every day for the entire year. Then you're like, oh, I'd rather not earn this kind of money. I can sleep better at night. It's more important to me. So yeah, I'm not doing wheeling for a very long time already.
So just a disclaimer, you still hold your Tesla position, right?
Yes, I'm still holding.
Okay, Bunty, I saw you unmuted. Bunty, you wanted to say something?
No lah. I just curious, like, because for those who do wheeling, like, the concept is more like, okay, if it shoot up, then I just let it call away, and then I just continue to sell put, and then once it drop back down, then I take delivery. I thought that should be something like a less stressful kind of strategy. Why are you feeling so stressed on that wheeling strategy?
No, like I have to think about how to deploy. Plus wheeling, I'm limiting my upside also. I'd rather use that money just DCA. I can earn more than just wheeling. Yeah, like for example, if I wheel, let's say Tesla lah, at most I can 1 year earn 20% at most lah. But if I just let it run by itself lah, Tesla historically has run up more than 20% in a year lah. So I don't want to limit my upside lah.
Yeah, Chicken agree with this?
No comments. I don't know lah. I think 20%. I think can win Buffett, yeah. If you're really damn good lah. I'm just saying because I think he's 19 point something only lah for 50
No,
years.
I'm not saying me. I'm saying the stock.
Oh,
It has the potential to run up, the potential to run down also.
right.
No, the
right.
part I want to get Chicken's view is that he will I believe he will say 20% that was before, but now price so high already, maybe cannot 20% anymore.
No, Tesla came down quite a fair bit really, what?
So can buy
No lah, I'm just saying cause Calvin talking about wheeling is the yield, right? The yield on your capital, right? So as long as Tesla remains volatile, I think 20%, as long as you can do it properly, should be okay lah. But I'm just saying, like, to benchmark it as a target annual return, I think can fight Buffett. That's all I have to say. Yeah. But anyway, I think on the can buy cannot buy part, I did make a video on Tesla before. I'm gonna sell a coffin here. Mike wants, if you want to watch, go and watch that video. If not, I yeah. Still fantastic execution. Fantastic execution. Valuation, I might be a little bit more concerned for now. Yeah, that's that. Vincent said, have you seen how 4,200 points on S&P 500 is the mother of all resistance? So evidently they haven't break the 4.2k yet. So why are you still so bullish, Eric? Technical wise though, I think this is from a technical perspective.
I think if you look at the chart, right, it's going up like I think like what Kelvin shared earlier is wedging, and I think the person that was the most pro at this wedging thing was Chicken Genius, right?
I think he made a few calls on that.
Yeah, he was very good at doing these wedge videos. I highly recommend that you go and dig out his videos. I benefited quite a bit. I think wedge formation is quite a powerful formation in a trending market. So when you have the consolidation, right, it's like a spring coil going to jump either direction. And particularly if you couple it with the trending indicators, right, I think it's pretty good. Yeah, and one other thing I want to ask Kelvin, right, is wheeling strategy, right? Is it more for like a range bound kind of market rather than a trending market? That's why
Yeah,
I think
correct.
here you found it a little bit harder to do, right?
Yeah, it works if you can predict the range, then wheeling is very easy. But it doesn't work in this kind of, like, I don't even know where is it going to go up or go down. I can't tell, right? So I'd rather not do it.
Yeah, that's a wise call, I think, in this market.
There's one comment here. The timing for you guys always so soon. Please post more bearish topics so market can inverse. Okay. I comment noted. I don't know. I don't think we've been very, very bearish in the markets actually. In fact, the three of them have been extremely bullish if you actually walk through or watch through the entire video. So don't exactly know what you're talking about. Next comment. Any comments on Palantir? I think the two stocks currently that is the most volatile, the most interest is Palantir and NVIDIA, because both of them have been extremely, extremely green on a year-to-date basis. I think both is near 100%, if I'm not, or at least I know Palantir is close to 100%. So any just rough thoughts on Palantir?
Actually, Palantir, I really don't understand the business. I know there's a commercial and there's a government side. Like the government side seems to be dropping, commercial side is going up. That's the most I have understood. I also understood that they are operating on AI and they can predict certain things, helping like governments and commercial. That's like the most I ever gleaned from all the YouTube that I watch online. But I don't know, like even CJS, when he say Palantir is very good and all that, right? He would reference to like other so-called smarter people, much smarter than him, that they are invested in Palantir also. So to me, that's like a red flag lah, to me at least. Because if you say that you are going in because people way smarter than you are in, it's like a little bit of borrowed conviction, so-called. But he's trading lah, so I think whatever works for him. But I think Palantir has went down from 20 over dollars to like $7. So even if it pumps up 100%, I don't know. Is it
That one
Actually,
is
good?
already pumped up already, right? I think it's what,
yeah, it
$12
already
now?
pumped back up.
Up to 20 already? I never see it.
No, pump
13.
up by close to 100%. If you measure from the 52 weeks low.
So what's
So
the
from
price?
7 to let's say 12, right? So that's quite a huge jump.
Oh, now it's about $12. Okay.
No, lah, but I think for there are differences because there are like long term one. There are a few that bought in really, really early on. So they've been averaging down. So I think for those, most of them are probably still in the red. But I think for CG, he is I'm quite sure he managed to turn a six figures the time when because he bought in at a really, really low price. So yeah, that's for Palantir. Any thoughts from Bunti or Calvin on Palantir?
For me, like what Eric just shared, I don't understand. So very hard to hold. It's like you bought it. Let's say now we go in, right, like $12. You go out to 15 or 16, you're going to sell already because you don't understand how to hold, right? And if it drop to 10, maybe you also panic, also will sell. So it become like a trading positions instead of like investment, long-term investment. Unless you really understand the company inside out, you at least know the business model, then only you can treat it as a long-term investment, right? But my main concern of this company is not like talking about people describe it as meme or whatever, right? My main concern is that I know their business, right, is a bit hard to scale. Like they're selling software, but at the same time, they need to have their consultant go into the client companies to really model the things, right? So that's why they really it's not like a software that can just anyone can download and anyone can use. It's not as simple as that. It's more like a software plus the consulting part in terms of how they do the sales, right? And how the product is being used. So that part, I think the acquisition costs, acquire customer to onboard customer require a lot of effort and time, and that's why it limits them in terms of their growth. Like whether it can scale at a very low capital or not, I quite doubt it. So that's my but very, how to say, a surface kind of assessment on the business. So not owning the company.
What about Calvin?
Kelvin is preparing the chart, is
Oh,
it, for
hi.
Palantir?
For me, yeah, I still don't understand the company lah. I tried researching about it lah. Yeah, but I roughly guess the reason people say Palantir is a good stock for an unstable future where there's like conflict between countries. That's like the narrative, right? But you still have to see whether the company is earning money. But it seems like he has started to turn a positive net income over the past 2 quarters. So that's why Palantir started going back up. Can this sustain? This one I don't know lah. If I know, I will have all in already lah. So yeah, so like I say lah, I rather just buy safe stocks, do it the safe way, just try to stay alive until I reach my goal, then only start to talk lah. Yeah, my portfolio is risky enough with just Tesla in it, so no Palantir for me.
Right. Eric, actually there's one comment that specifically call you out though. May I have Eric's analysis on the S&P 500?
I thought that
Maybe-
was what we were talking about for the whole time.
Yeah, maybe have some more details in terms of what are you talking about? Like, what do you want to know about Eric's analysis? But yeah, I saw your comment.
I saw this other comment. I think someone was asking, right? Lim Chi Hian asking about thoughts on SE. I think it's just tragic. Their most recent earnings, the recent one, it's just tragic. If you look at the earnings surprise and estimate, right, you realize that the first quarter, right, where they announced, the consensus was negative 61 cents EPS, and then they managed to turn a profit $1.01. So that was like, market is very happy, like, wow, nice leh, we expect you to lose money and you make money. So everyone happy, beat up the share like 20%. And then this most recent quarter, sad case, they still make profit, but it was less than the consensus. So it's basically market expectation. Like they are profitable, they managed to stay profitable for the second quarter in their entire existence. So I think it is quite an okay achievement based on the fact that they are still growing, right? But market consensus is much higher this time because the last time they got surprised, they're like, "What, nice, you guys, good. Let's put our bar higher." Then now they jump below the bar, then they're like, "Oh, looks like you're not performing up to our expectations." So they sell the share. So I think all in all, if you look through the past 6 months, right, the market beat it up, the market crashed it down. They're back to where they started like 6 months ago. So it's a little bit of a tragic, I think, for the company because fundamentally they are still growing. Gaming is down still a little bit, and then I haven't really dug into the details, but those are my like macro thoughts.
But then the growth is not that fantastic. I look at the
No.
most recent growth rate, right? It's only like 5%. I think around 2021, their growth rate is like above 100%, right? So that was like super high growth companies. They're now trending down to like 5%. It's like almost not growing already. Is that still a good buy given that the overall story is still a growth stock, right? When growth stocks,
you're saying 5% for the whole company, like all three
Yes.
sectors together.
yeah,
Gap revenue.
total revenue. Yeah.
Yeah. But e-commerce is plus 46%.
Yeah lah. So I think you got to break out by each segment. The gaming is down, so it's dragging the whole company. So the e-commerce is up steadily, but
Yeah.
I think the financial should be their biggest growth engine.
But the
Recently.
cash cow down, that's bad, right?
Yeah, that's why they're trying
That's why
to
the
cut costs.
market. That's why it's from 300 to 60, right? As in,
Yeah.
it's all a reflection of expectations,
Yeah, lor. So hopefully the market will temper their expectation, because even though they are growing, they are not really going to grow at those kind of pace, because they are not burning money anymore to fund the growth. Last time they were throwing money, right? Like they say, oh, you buy things, right? We give you coins, like you can earn like almost 100% of your spending. But now they cut down quite a lot. So I think the consumers, they are like going over to other platform to look see also like Lazada and all the others. So it's not just them dominating the whole thing. I hope I answered that.
So
that question.
So which one is stronger, Lazada or Shopee? We have
I
a
think
Lazada
Southeast
shareholder
Asia-
here.
Southeast Asia should be still SE stronger, right?
Yeah. Have you maybe Chicken can comment. What's their market shares right now? Let's say talking about
No
Southeast
lah,
Asia.
Shopee is definitely still number one lah. Cause Southeast Asia is a very fragmented market.
But what is there any changes after they cut down their spending on all this
Have lah,
marketing?
Lazada or at least Alibaba's international commerce suddenly accelerate by quite a large margin lah. Last time was like 10 plus, now it's like can go 20, 30 kind, like based on their own disclosure. But they didn't really split out Lazada as an individual component lah. They lump it together with the other like AliExpress, Trendy, all those kinds. So, but overall the growth can see that it's also increasing lah. Partly due to because Shopee toned down their expenses, so their business that ran over. But I think those are just feels very much like C's or Southeast Asia, C as in not C Limited. Southeast Asia's e-commerce business is pretty commoditized in this way because people have no loyalty, and the way that time C Limited tried to attract users didn't manage to like really retain lah. But I still believe that there are very loyal C or Shopee users out there. Gray actually replied back to Eric. Eric, he said he want to see your chart. He want you to share screen and open your chart for S&P analysis. You are muted.
Hold on. I first time doing this.
Lai liao.
Okay,
Virgin.
then before that, right, I think Pang did say that for Palantir, for people interested in Palantir, they follow Code Strat and Amit channel. We are not endorsing them, just maybe potential other resources. Passing the time back to Eric.
Okay, so just to answer Gray's question, this is my very noob chart. I apply very basic TA lah. Like they say astrology, they always laugh at me. But yeah, the guru is of course Kelvin. But I'm just sharing, like, because I look at the 50 and 200 day moving average quite extensively. Those form my macro picture lah for the TA. So you can see here, right? The last time we crossed was like around 2020. So this, when they made this golden cross, right, they actually trend up for a pretty long time, about 2 years. So after you break down, you can see that, wow, it really came down quite a lot, right? And then now, I think February, we break above it again. So this is when I feel that we are probably at the start of a new run. I don't know how long this run will be, but I'm pretty sure it will be like fluctuating like a wave like that, going up. Yeah, so this is my 2 cents. I don't know whether this helps you in any sense, but this is how I see the market. Okay, okay, I'm done.
Okay, next point from David. Since some big tech are highly valued now, doesn't it make sense to take some profits? Not to sell the entire position, but just take profit on 10 to 20% of the position. And then he followed up with, being longer term investor doesn't mean need to hold forever, especially when the valuation is high. Just my 2 cents. I actually want to direct this to Bunti because I think the most US tech oriented one is him. I think Eric has quite a diversified one. Kelvin is yeah. So yeah, Bunti.
Yeah, I think I mean, this question is not new. I would say quite common when, when market drop, people will tend to say, okay, why not we buy more now? Now it's cheaper, right? So I'm happy to buy at $100. Now it's $80. I should buy more. Then if you reverse it, it should be like, oh, now market so high already. Stop buying is not enough. We should trim down a bit, then buy low, sell high, that kind of situation. So in order to, like do better than the markets, right? So I think people always thought that this one, they can, like generate what we call the alpha or market timing to get better returns. Whether this one really have any result or not, I think as long as you are in the market for, long enough, right? By long enough, I mean at least 3 years, 3 or 5 years, then whether you do this, can you just beat like a buy and hold, or just can you just beat a DCA, right? You can do your own calculations and make a judgment on whether you are able to do it. I'm sure that, let's say, imagine, and Mr. Lu is not here, right? I'm sure that if he's here, we ask this question to him, he will just say, definitely it works. It works for him, right? So he's like keeping cash for so many, like maybe I won't say maybe many years now, probably many months. Then market drop, then he go in big. Now go up already. He think it works for him, right? Which I do agree. So some people are able to make it work, but are you able to make it work for yourself? That's the question that you should ask, right? So I won't say it don't do that. I should just say you do whatever you think that's best for you. I do think that it is sensible to say, okay, let's cut down a bit, especially if you think that market is overpriced. Yeah, it's not there's nothing wrong. It's just that just now I think Kevin asked, right? Kevin said, what if we are not buying now, market keep going up? So how? So I think I'm coming from a perspective that it is a lot harder to generate additional returns, but at least we should come up with a strategy that's at least emotionally work for us. So for example, if market keep going up and I'm buying a little bit, I think still okay. But the moment I sell like the 10 or 20% of my portfolio and then market just chong up by 20%, right? Then it's very hard for me, emotionally. I'd rather just do nothing and at least emotionally I feel better. So yeah, that's why the reason of I'm not taking any profit out of my portfolio. Yeah, when I went in, I say this is like long-term hold. So I just do whatever that I set for myself. And that's me, right? I'm not saying everyone should follow this kind of approach, right? Yeah.
Actually, I wanted to share something, because there are two parts to this. One is the strategy part, which is the taking profit one. And then I think the first fundamental assumption is the highly valued part, right? So let me share something. Okay, I don't know whether you can see the screen. Can, right? So I think these are just general, like this is from Yadani Research. This is free of charge. You can just Google it. I think just looking at how individual companies are performing, right? Some of this air quotes overvaluation might not really be egregious in nature, meaning like it's not unfair for the market to give them this sort of valuation. So just take for example a few companies that Bunti has in his position that is the biggest one lah. I think you have Microsoft. I've forgotten what's the other two. I think you have Microsoft, you have Apple.
I
But
think I
okay,
have
let's
all
look
of
at
them except for I
the
don't have
10% kind,
I
the
don't
more
have
than 10% kind.
Netflix. Yeah, I don't have Facebook and Netflix. The
Okay,
big one,
so
Apple, Microsoft. Yeah.
right. So you look at those few, right? Like just look at Apple and Microsoft because those are probably arguably the most expensive ones like, in the whole market. So the Apple one is the green line. So you can see that generally it's sloping up. This is in terms of profit margin, by the way, like the margin percentage, that which translates to earnings. The green line is sloping up. The blue line, which is this Microsoft, the light blue line is also sloping up like crazy. Then when we scroll down and look at like in terms of valuation, right? Let me find. Yeah, this one. So this is the forward PE. So this scale is a bit screwed up because of two companies, Amazon and Netflix. They have very crazy PE ratios. But I think generally when you look at it, right, I think coming down from their crazy times back then when they were bidding up prices, uh, will you argue that they are crazily overvalued? I'm not too sure. Fairly valued maybe, but then like I said, if from fairly valued go to overvalued, I think there's still quite a much room to run. But if it's like from overvalued go to even more overvalued, maybe you can argue that, like for example, a particular company with a price to sales of 30 times, you want to take profit. I think nobody will blame you for that. But if it's for big tech now, I don't necessarily think that they're like crazily overvalued. So that's the discussion on the highly valued part. Okay, next one. I think Sean is back. So Sean has the first comment in the live chat just now. At 4 p.m. he came in and he typed he could join. So he did join. So shout out to Sean. He was on for a guest episode. So for those of you who haven't checked it out, please remember to go back and check it. So his question is pointed towards the Tesla shareholders. Any outlook on Tesla going forward? Is Elon Musk back on form to steer the rocket to the moon? I think the biggest Tesla bull here. Kelvin, you want to share some opinion?
I thought Eric is the biggest one.
I think in terms of allocation, you are the biggest bull though. But yeah, you.
No, we look at the absolute number of shares.
For me, I've never looked at Elon Musk as the guy who is steering the wheel since a long time ago lah. Like right now, he's probably the only effect he has is on the stock price. That's all. I don't think it's affecting the company at all. So it's like you see like Twitter, so you sell the share, you affect the stock price. It doesn't affect the company. Tesla is producing more car. Then I think this one or 2 days he was talking cock about he was just talking about the OpenAI thing lah. Basically, he said that why he didn't become the leadership in OpenAI. Again, it doesn't affect Tesla. So yeah, Elon is never a factor in Tesla since recent times already lah. So but overall, so if I put aside Elon Musk and I just look at the company by itself lah, right now it seems like they still have problem with their inventory. So it seems so at the beginning of this year, it's like China, inventory in China was building up. Then they start shipping the inventory to Europe. Then now the inventory in Europe start to go up because all the cars were coming from China. So, but this is expected lah. So because economy is not good ma, interest rate is high ma, people are buying less Tesla cars ma. It's like quite funny. It's like in 2020 and 2021, I was seeing so many Tesla bulls were buying Tesla cars. Then now if you go into the Tesla chat room, right, the Singapore Tesla chat room, you'll start to see a few Tesla car owners start to sell the Tesla cars. So, so I don't know what's going on. So it's like it's like a cycle that's going on. But long term wise, Tesla is still one step closer to solving their AI thing again, the autopilot thing. Which I think they are the closest one lah. Let's not talk about the who sells the most cars lah. That one everyone is saying is BYD, but if you just add only the electric vehicle, pure electric vehicle, Tesla is obviously winning lah. Autopilot, Tesla is obviously winning. Yeah, so that's why I'm still bullish on Tesla lah. Everything is still going on as normal lah.
Eric,
I think I think Sean probably was referring to the recent announcement of the new Twitter CEO, right? Yeah. Then I think the market was pretty happy that there's a new lady steering the Twitter ship instead of Elon like being the main guy. But his remarks I thought wasn't really that bullish, because he said he will stay on as the CTO, which arguably for a tech company, CTO is, I think, is like even more important than the CEO. CEO like just talk a bit, but CTO is like, is it Kelvin? Is
Yeah,
that,
I feel like she's there just as a puppet.
yeah, it's a puppet.
It's just there to be the face of Twitter, but in the end, it's still Elon that's doing the steering.
Yes. The product mix, and then the what you call that, the roadmap for Twitter, and then how they are going to get to profitability. I think all this is pulling the strings behind the back, but because a lot of those fund managers, right, they make a lot of noise, right? Like say, oh, you should not tap Twitter so much. You should take a back seat. Then he like, okay, lor, I take a back seat, but I'm still pulling the strings. So I don't know, like some people see through this and they say, oh, but CTO is like even more involved than CEO. So I thought, to answer Sean's question, right, I think Elon is not really back. He's just like pretending to be back, but he's still there in Twitter. He's still trying to iron things out. If you look at Twitter, they haven't really achieved profitability yet. So I don't see any reason why Elon will take his feet off the pedal.
But if you follow the news, right, Twitter has been adding quite a lot of new features there.
Yeah.
There was that monetization for creators. Then there was that 2-hour video uploading thing. So I am starting to get very excited about Twitter. Even though I'm not using Twitter, so
when
far
are
I'm
you
just
creating
using Twitter
content on Twitter?
to track what Chicken Genius is doing and what the Tesla cult people are saying on Twitter. Other than that, I don't use Twitter at all.
Question is, Kelvin, will you will you ever consider using Twitter, right, to broadcast your video?
Where there's money, I will go.
Wow. Okay.
Twitter is the thing that all the cool kid uses, right? Like the Darren Yong, he uses Twitter. Adam Khoo, he uses Twitter. I think Adam Khoo uses Twitter to like, it's a bit like to trash talk the best. I don't know.
No, because I think attention span and target audience are a bit different on different platform. So yeah. I think before I allow Bunti to answer, Bunti, actually there's a question from Ben. Say, curious, how's your portfolio doing right now based on your DCA strategy? And maybe you can share more on your strategy. But before I let him answer, if you haven't subscribed to him, please go and subscribe. I think he released his portfolio review for year end last year. You can aga guesstimate what's his year-to-date return. More than 20%. Because he hold companies like NVIDIA, those kind that bump like quite crazy. So if he bought some more, he probably quite green. My guess is
Yeah.
20% year-to-date.
Yeah, year to date numbers. This is the best part, right? Year to date, positive 34% overall portfolio. So
Yeah.
that's what, right? What big, right? But if you just look at 3 years, right? Historical 3 years, right? Still cannot beat S&P. I also don't know what's wrong with my portfolio. Something must be wrong there. So yeah, just sharing. But DCA, nothing much to share. Like, it's just like, buy, keep buying, keep buying, keep buying. Right? It's not really like a fantastic things. It's just like systematic. So just consistently discipline kind of buy. Yeah.
Oh, on
Nothing more
this
to add.
topic of DCA, Gray said, when you guys DCA, do you guys have a stop loss in terms of price, regardless of fundamentals? Like if nothing fundamentally changes but price keep dropping, is there an invalidation? Bunti shake his head. Kelvin and Eric,
Punti never buys losing stock lah.
I would say yeah, actually, let's say when I say DCA, it's like overall portfolio, right? Like every month you buy something, you just accumulate shares, right? So that's DCA to me. But let's say if you do stock pick and the companies that you invested, you think that there's something wrong with them, so you still have to, like do your reallocations, right? So yeah.
I think my view is that if you DCA, right, my view is that the best one, no invalidation, is DCA on the index. Then that one no invalidation. Like
Yeah,
you can do it
100%.
forever. But if you're DCAing on a company, right, it depends on your level of conviction. Because I have seen a lot of companies, right, where nothing changes, so-called nothing changes, right, but the stock price keep going down, keep grinding lower and lower. There's always something that happened. It's just that you don't know it yet, right? There's something that happened in the company. Insiders know, people close to the insider know, and then some accredited investors know, and they are selling out. They're grinding the price down, but you don't know yet. The public doesn't know yet. So how? So you watch the thing keep going down, right? And then you Google, no news, but the price keep going down every day. How can it be, right? So like surely some people that are invested, value investor will pick it up and stop the drop, right? But it just keep going down. So it tells you that something is fundamentally wrong with the company. But if you're like super convicted, right? Like, wow, I researched this company, I know the CFO, everything should be okay. So you pump a lot of money in, and then the thing like rebound a lot, and then you're like, see, so it can be either case. It depends on your conviction. But I think for me, right, personally, if you ask me, if I see my company keep dropping in the price, right, I will get worried lah. I will get a bit worried. Like if it keeps dropping, that of course there will be a invalidation point. Like something must be wrong, right? Cannot be people sell then there's nothing wrong. So I think if you really want to DCA and you meet this kind of scenario, right? Better ask yourself, how sure are you won't be wrong? I think that's the question that we all have to grapple with. I mean, you cannot get the answer from us lah. None of us here knows, like, is there anything wrong in the company? But you have to ask yourself, how convicted are you? Yeah, like when I see Tesla went down so much, I also scared, right? I also scared. I also don't dare to
Cannot
buy.
be how you the biggest Tesla bull here. How to scared?
Scared. I'm not like Kelvin. He cry, then he buy some more. But I'm really scared. The time it dropped to 100, I was like, oh my goodness, please stop dropping. I can feel that, yeah, I'm going to get strangled soon.
But for Jiking, you see your Baba drop like 3 times, 60%, 70%. You're not scared, man.
Not scared is fake one lah. As in those people that say, "Wow, I close the market, come back 10 years later, then see the stock price." That kind. I don't really believe them, but I think how would I put it? Because at the end of the day, if the mechanism of the market, because the stock market is a auction house, right? Because buy and sell is by demand supply. Then, like what Eric said, there is this first wave of insider selling first, and then people that knows and the market will kind of front run and price it because it's all pricing future expectations, right? So that's why when emotions come in, right, and when very good storytelling and narrative building comes in, then of course the price will go down. Because I think I was joking with Bunty the other time also, because when you see NVIDIA, 3x, one third, 3x again. Wow, this one, how good, the storytelling. 300, 100, now jump to 300 again. That is basically the function of auction house. So then when you kind of disconnect it and just look at company fundamentals, there is definitely reasons to why the stock price is dropping. Fundamentals definitely look bad for a while one. Because like even NVIDIA is like down 20%. That's why 300, 100. Now go back to 300 again means that we'll start having, I don't know, 50%, 100% growth. I don't know. But I guess this is part of the game lah. So you just need to kind of get comfortable with the game. That's just my thoughts. And yeah, Bunti.
Yeah, Alibaba, I don't know how, like, I haven't really followed the companies recently, like, especially the most recent quarterly earnings, right? I heard that their e-commerce also not doing very well, right? The CMR also dropped, right? So any comment on that, Chicken?
Has been dropping for 1 year already. I think now is the cause of the quarter. As in, it's a, how do I put it? They say it's a slow death, meaning like it's down 3%, 5%. It's not like those like NVIDIA that kind of down 20% straight in one quarter. It's not lah. But this slow bleeding, I think, is even more emotionally hard to handle particularly for many investors, because it has been dragged on for at least, I don't know how long, 30 months now. It's 2 years plus. So I think when you look at all things considered, when you look at the environment, like economy and blah blah blah, right? There is always like a particular excuse. So then I think many people's or many investors' patience is waning low, myself included. So now the reopening story and the reopening excuse cannot use really. So now we'll see in the next coming quarter, because the ramping up and the friction got a bit.
Yeah.
You just give them 3 to 4 quarters now. If 1 year later you come back and it's still down 5%, then I think there's something seriously wrong with the business really, because
Actually,
there's no more excuse.
let's say if you just talk about macro, right? Like China macro, all these things, I think that one, nobody can predict it. Like if the macro is good, everyone is good, that's fine, right? But is there a concern on their, when it comes to their how to say, their mode when they have to compete with, let's say, like ByteDance and so on? Because you look at ByteDance, basically Douyin, right? Their numbers looks good, right? Revenue growth, their earnings also. There's rumor of how much
You
they
can't
earn
look,
in a
right?
year. Yeah,
As in,
and
yeah
then
lah,
there's
those are
rumor, right?
all
They're
looks
earning
lah,
big
yeah.
big money, right? And there's serious competitions from all the live streaming e-commerce, right? So I don't know. I know that Alibaba is also in this space. It's just that is there any sign that they actually not able to compete well with Douyin, and hence they lose out on their e-commerce? Any comment?
Completely agree, by the way. So as in, this has been a top of my list, as in top of my priority to kind of follow. So if let's say you talk about e-commerce only, as in, I don't want this to become an Alibaba only discussion, because there are quite a few but I'll just give you a brief comments, right? The things that you can follow e-commerce is JD, Pinduoduo. Advertising you can follow Tencent. Cloud you can follow Tencent, Baidu. So all these you have to break it down yourself and follow all of them. So actually technically all the big tech is in my watch list because I need to follow. So JD recently their earnings report is 1.4%. Is it good? I don't know. Is JD also losing to ByteDance? Probably. Is Pinduoduo losing to ByteDance? Probably. But the problem is we don't know what's ByteDance number, because it's all floating around. And because ByteDance is a global player, so the international numbers can mix in with the local numbers, and then who knows how much they earn from where. So now there is still a level of benefit of doubt. And that's why you have to continuously monitor. I think the same goes for cloud and what, because cloud now I think it's also like -1%, -2% when others are decent, seemingly doing better. So that's why I'm just saying, that's why being an investor or picking stocks is a hard thing. I'm not encouraging everyone to pick stocks, even though ironically all four of us here pick stocks. Which kind of let me pivot to the next question. I don't know why is it directed to me from Andy, because all four of us pick stocks. So many people believe that they can pick undervalued stocks and outperform the market, but majority of fund managers with a team of pros don't beat the index. How do you determine that you're on the right track? You can't. Only time will tell. It's always a backward looking thing. 10 years, 20 years later, if you earn a lot of money, you beat the index, then you know that you beat the index. I think generally for us, there is a lot of, how do I put it? We are kind of probably a little bit different. Even though you like to say that the correct answer is to just buy S&P 500, I'm quite sure many of you that tune in probably pick your own stocks. Don't bluff me also. For those of you to click into a Tesla video or Alibaba video means that you pick stock already. If not, why are you interested in the game in the first place? So then, I don't know whether is it a habit or you want your hand itchy, you want to pick stock, you think you're smart or whatever. I know that most of us or most of the investors out there probably lose the index. It's research, it's well documented. But then again, the money is you earn one. We can't really dictate where you're gonna put your money. So if you're still gonna pick stocks, then try to do it with a strategy, with a proper thing. And like I think Kelvin that time said in one of the Seedly event, if you don't even try before, how you know you're not the next Buffett? I'll pass the time to Kelvin if you have any comments on this.
So there's this thing called the Dunning-Kruger effect. You can go search it up. Basically, it's like newbies will think they are more expert than the pros. So that comment, if you don't try, you will know that you are Warren Buffett, is actually directed to the newbies who think that they are more pro than people like Adam Khoo and Warren Buffett. So basically, I'm just saying, if you think that you are good, right, you just go and try it for a few years. Anyway, if you are in your 20s, you have time to recover from your losses. And the money that you lose in your 20s, you can easily make it back. It's not like you are investing a few million. You are just investing a few 10,000 at most. So, so just try it. I tried it and I definitely regretted it. That's why I'm slowly pivoting back to index already. But it was fun while it lasted. And I learned quite a lot of things that I wouldn't have known if I have not tried. I've known that I'm not Warren Buffett. I know that I'm a worse stock picker than Bunty, this kind of thing. So after a while, I think it's like this maturity in the market. It's like becoming a mature investor. You get more temperament when you start to know that you're not good enough. So yeah, that's
So Eric,
that's
why
I say
you
you
pick
should try.
stocks?
Sorry,
Why you pick stocks?
why I pick stocks? Because it's fun, Because all Chinese like to gamble, You don't know, me? Are you Chinese? You like to gamble? So pick stocks, Yeah, but I don't know. I think logically speaking, right, we should all listen to Warren Buffett, but emotionally speaking, psychologically, right, none of us will listen to him because nobody wants to get rich slowly. Like who if you can
Hey.
what with Tesla in 1 year, why you want to wait 30 years? Like doesn't make sense, right?
Funny thing is
So
Buffett don't even follow his own advice. But if everybody, never mind, Punti, you unmuted
Yeah,
just
I
now.
just want to say the same thing. It's like I don't listening to what Buffett say. I just do what he's doing, which is to pick your own stocks.
No lah, you want to follow Buffett, you should buy Berkshire right?
No, as in follow his in between index and stock picking, he chose stock picking, right? So I follow that. So we follow the stock picking path. But I'll just add a little bit on this. I think we talked about this before, right? I think the best part about picking stocks is it's not about like winning the index. It's not about beating the index, It's all about like learning what is the companies that you invest in. Imagine, right? For example, like okay, your auntie come and ask you, hey, Chicken, I have 100,000. How should I invest? Then you say, go buy S&P 500, which is a sound advice, right? Then your auntie go and buy, okay, buy 100K. 4 weeks later, come back, 100K now drop to 96K. Where's my 4K? Can you, like I don't even know what I bought. Like, what is S&P 500? What is it 500 like? Is it like, whatever lah. So your auntie maybe don't understand at all what is that 500. What are the companies in there, right? So it's very hard to like really hold on to an investment that you don't know about, right? So, but for us who do like stock picks, right? You can be picking companies in the S&P 500 or not in the S&P 500. Then you can do comparison, right? Even if let's say you buy Alibaba, you can still compare Alibaba versus Amazon and see which cloud business is better, right? So, for example, so I mean, after you do comparison, you have some familiarity. You know what are the companies in there. Then it make a lot easier for you to hold on an index later on when you say, actually, okay, enough with the learning. I just want to get something easy, which is just stick with ETF or like index. Yeah, that's my how to say my reason of picking stocks.
I think
is to
I
learn.
think the other time, right? I think even though joking, right? Like I don't know, suddenly very heated. There's a lot of comments in the chat. I think Kelvin did say it as a joke, as in if you don't try, you don't know whether you're the next Buffett. But I think behind this joke, there's a deeper meaning. Meaning because when you're playing with paper account, right? Like not your money, right? You
Then
say
you
that, oh, you
retire.
learn, yeah, there is no doesn't pain, it doesn't hurt you. So then I think the whole process of discovering yourself or uncovering like whether you have the emotional stability or whatever, yeah, exactly what Zach and Chisia is doing in the comments. They are arguing back and forth saying, oh, Buffett is right because Buffett knows himself, and then you're in your general public, you all don't know what you're doing, so you'll just buy index. Then like what Bunti says, right? I think that's a real that will be a real example, by the way, when in Chinese New Year or whatever they say, wow, I got a lot of money, I want to invest. But they don't know what they're investing. Then they invest in S&P 500 and then it falls. And then the logic to them is I'm investing in a black box that presumably will give me 8 to 10% return. But I don't know why. Even though if I know why, I don't have the emotional stability to hold it. So it means that they're not suitable for holding equities in the first place because they should be more comfortable with fixed income, insurance, whatever. So then it's a whole process of discovering yourself. And we are not trying to abdicate or not trying to give you guys the gospel truth. Hey guys, you all need to pick stocks or you all shouldn't pick stocks or you all should index. It's a whole self-discovery process and we're just outlets for expressing different opinions. So whether you want to listen to it or not, that's up to you. So I think we're just gonna close this thing because time is running out a little bit now, 11 plus already. So I think just a last topic because I think I saw Isa mentioning it 2 times. I think I missed it just now. So I don't know whether you guys can watch it. What are your thoughts on Microsoft Fabric? Do you think Google will ever have a chance to be able to bring the Microsoft's B2B mode due to this recent development? Want to know your thoughts because I believe Google has more access to data and possibly have more data collected. Maybe Bunti, do you follow this whole Microsoft and Google?
Yeah, I
development?
haven't watched the latest, they call the Microsoft build, right, event. I think the Google one I watched like halfway, haven't finished, quite long. I watched the short version, the summary version. But come back to Microsoft Fabric, right? I think this one I don't know much. I just know that there is some like what they call it, like it's like a software as a service kind of business model, just for data analytics. I think this is like for now, just treat it as something that is small. In fact, I think they have something similar, this kind of offerings currently, right? So I think they're just coming up with new software or a new service to like add values, take in more revenues, and basically just offering a service to the customer. How big it is, I doubt so, given that they just started out. That's on Microsoft lah. And on Google, right? I would say Google, in terms of their business, I still see them as an advertising business. It's very hard to break from them because the advertising part is really deep in their DNA. It's not like they are new in B2B. For example, like Google Sheets, like Google Workplace, all these are like, they sell it to corporates, right? But you see how much money they invest in, let's say, all this software, I think isn't that much. I don't feel there's a lot of improvement in there. So in terms of their business, they are still very different business, and their DNA is totally different. So if you want to bet on advertising, bet on like macro will turn out well, just go for Google's. If you want to bet on software, like B2B, kind of a business, right, then Microsoft is the one to go for. I think they don't really compete much with each other. Although some specific areas they overlap and they do compete, but in terms of the core business, right, it's still very different. Yeah, that's my take.
Not advice, thanks. It's Bunti's own opinion. I think Bunti is probably the most educated in this two companies,
No
so I'll
lah, I
just
don't know
leave
lah.
it as that.
Talk only. I got educated.
Most educated. That's why it's a relative term. So most educated as in now among the four of us. So yeah, I think time is slightly running out. Hope you guys enjoyed the discussion. If you guys have any more questions, can leave in the comment section down below. If you have time, you can pop by and kind of just answer it in the comments as well. So yeah, hope you guys enjoyed the discussion. We'll see you in the next video. Goodbye.
Bye bye.